You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music means we are back. It is time once again for Education Wednesday, what the cool kids call around these parts, OBC. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which so many of you folks are binging and mainlining. Keep it up. There's more bandwidth where that came from. Yet another reminder, if you're just listening to OBC, make sure you're subscribed to the full Options Insider Radio Network, wherever you get your favorite podcasts, Apple, Spotify, Audible, wherever. A growing number of you like to consume it on the old tubes. We got content for you there as well. A lot of great places to get all of the goodies. And of course, speaking of the goodies, if you want more good goodies, you want your questions like today's question to get bumped to the top of the list and also become quite the discussion point around the network and get personal responses from participants on the network to your questions. You want to join us for pro Q&A sessions. Of course, options oddities at the end of every week, early access to a lot of other great stuff, even giveaways, and of course, live streams, because why not? The optionsinsider.com/pro is the place to go to learn more. I didn't have stuff going on yesterday. I was surprised to have a repeat visit to the old dentist. I thought that was a one and done deal, but apparently it was one of two. Why bill you once when they could bill you twice for the same procedure? So yes, nothing going on yesterday, unfortunately, but my mouth feels good. I'm back. I'm raring to go. And that means I am joined once again by the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring, what the cool kids call to Mr. P, welcome back to the show, and have any of our listeners come even close to guessing your middle name since the last time we chatted, sir? We've had so many ridiculous names thrown at you.
No, still not. I guess I still have to keep paying the college bills.
Giuseppe, Giordano, Levi Strauss. I mean, every name you could think of has been thrown out there for Dan's middle name. Maybe they don't want to win those bills. I know those are pretty sizable bills, Dan, for your firstborn there. So maybe they're purposely throwing the contest. But you know what, Dan? We got a wild one in store for us today. So wild, in fact, that we brought in some reinforcements. I do believe we are joined now, better late than never, if he can work out all the technology. You know, they got to pay the internet bill over there at the University of Indiana. I do believe this is his first time appearing on this program. He's been on a lot of the other programs on my network over the years, but I do believe making his first appearance on Options Bootcamp, none other than our good buddy, Mr. Russell Rhoads, a.k.a. Dr. Vix, beaming in, I do believe, from the hallowed halls of IU. Mr. Rhoads, are you there, sir? Can you hear me?
I'm hoofing from downtown Clarendon Hills to home to join you right now.
Oh, okay.
Dropped the freaking ball, but I think it's been a while since I dropped the ball, so I'm okay. And who is this Dan Passarelli person that I am on with? I'm not familiar with him.
He's that guy you said you could come on any show on my network. You said, except that one show with that Passarelli guy. You have it in your contract. Never. And I have broken it this week.
And I'm missing the green background there, Mr. Passarelli.
I know, yeah, a little change of location. Should have invited you on my road trip. That was the last time I saw you. We were on a road trip together.
Yes, it was. Where are you heading? Sorry. Right.
I'm hanging out in New Buffalo, Michigan today.
Oh, big fun.
Yeah.
Everyone's favorite stop in Michigan. And you know what, listeners? Today we got a good one in store for you. So let's get to it. A little bit of the old basic training.
All right, mood
It's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? You're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Pull in, prepare to learn.
All right, everybody, welcome to a little bit of basic training. We are going to have a fun one today because it's not very often on this show we get to talk about a topic that in this over 13-year history we've never really ever discussed. It's very rare. We've touched on most things on the decade-plus runtime of Options Bootcamp, but not really what we're talking about today. In fact, I just did a cursory search while we were talking through the archives, listeners. If you go all the way back to episode 43, which came out back in April of 2014, we did have a listener question that just mentioned the topic of today, but that was really about it. We didn't really go into it in any detail on the show. So really, this is a first-time topic. What the hell are we talking about today? We are talking about warrants, listeners. Yes, warrants. WTF are warrants, a lot of you are probably asking, and with good reason. Not really a big factor here in the U.S., although maybe that's changing. Maybe we are about to undergo, dare I say it, Dan, a warrant-assance here in the U.S. Mr. Passarelli, when I throw that term out, what springs to mind, sir?
Oh boy, well, I mean, a lot of things. One that comes to mind is dilution. The other is, another is kind of gimmick is another word that comes to mind. I don't know. I think there's a lot to unpack here with this.
Good words, dilution, gimmick, probably a lot of those can apply there, listeners. So let's get down to brass tacks while Mr. Dr. Vix is racing and huffing and puffing to make it back to his home office to beam in, listeners. I did tell him the time. Apparently, he's still on Indiana time. But I digress. You might say to yourself, warrants, what are we talking about? Let's set the table. Okay, so warrants, if you look it up in your old financial textbook, or if you go online, or dare I say it, the low-hanging fruit, you ask ChatGPT, what the heck are warrants? This is what they are going to tell you, listeners. And pay attention, might sound a little familiar. A warrant is a financial instrument that gives the holder the rights, but not the obligation to buy or sell a company's shares at a specific price before a specified expiration date. That may sound a little bit familiar to you, listeners, if you've been listening to this show at all over the last decade plus. It's one of the reasons why I've often backhandedly referred to these as kind of poor man's options, because that's effectively what they are. This description, you could pretty much overlay it with your technical textbook definition of an option out there. But Dan mentioned a couple of terms that make them a little bit different. But before I keep going, let's see. Has he arrived in his spacious abode? Mr. Rhoads, are you there, sir? And if I ask you the same question, because I know you teach these in your class, one of the reasons you wanted to join us. If I ask you that same little bit of word association with the term warrants, what springs to mind, sir?
The main thing that springs to mind for me is what happens when a warrant is exercised. And a lot of people don't realize that when a company issues warrants, they are responsible for issuing the shares, as opposed to the shares coming from a current holder. And it just comes to, it's actually a bit dilutive for companies when they issue warrants. But the reason that they will issue warrants is often as compensation for people taking on a bit excess risk by investing with them. Oh, they just took me out of the meeting.
But now we can hear you perfectly. There we go. You were echoing.
Can you hear me now?
Yes, there we go.
Okay, I don't hear them. So I had two different things open at once, and I was being yelled at for where the checkbook was. What I was just saying is the main thing with warrants that you have to keep in mind is they're actually dilutive to companies, because when you exercise your warrant, the company actually has to issue shares to you, and they can become somewhat dilutive. So it's not overly attractive for companies to issue warrants, and they generally do so to attract people is kind of a kicker for investing in shares or maybe even a fixed income instrument or a convertible. Outside of the U.S., there are a lot of banks in China that will arbitrarily issue warrants on stocks. And actually the bank will be responsible for getting the shares for you. So there is a deviation for that outside of the United States. But the main thing to really know about warrants is that they behave just like options. And what prompted us to talk about this on this program was somebody received through a split a few GameStop options.
We'll get there. We'll get there.
Warrants,
we'll get there in a second. Don't get ahead of us. We're going to get there.
But I was just going to say that that warrants. The question came out, and then I was also going to kick in there what you said about you're in triple digit on some of your programs now, and it was episode 40 of something where you think somebody asked about a warrant a million years ago. It's just really interesting that it doesn't come up, as a topic among traders very often. It was really, unless all of a sudden something just kind of pops up and you're like, what the heck was that?
Yeah, one of our producers told me, it was right before our European show when I was actually talking with you, that, hey, we have a question about warrants. And it resonated to me because I thought it came in for the European show, because that, to my mind, is where I associate with warrants. That's where there's a more robust warrant community than there is here in the U.S. for obvious reasons, listeners. We have a very robust listed options market here. The use case for warrants, not as straightforward. But as Russell pointed out, these are kind of poor man's options. They do behave a very similar fashion out there with a couple of key differences. If you're going out there right now and trading options on your Apples or your Teslas, those are issued by the exchange. They're listed on an exchange for the purposes of the public coming to trade them, buying and selling them to hedge and speculate and generate income, and all the reasons we use options, all the things we talk about here on the show every week. Warrants, very different beast. It's not issued by the SIBO or anything like that. This is effectively an OTC instrument issued by the company itself. And so this is something you are getting from the company. XYZ company is issuing a warrant specifically to you. And as Russell pointed out, it's usually done as a little bit of a sweetener, a little bit of an extra incentive. Maybe they're doing a debt offering and maybe it's not going so well. So they sprinkle a little bit of warrants on top. Hey, you buy our debt, you also get some warrants. Or maybe they're doing a preferred equity offering and maybe the same deal. Maybe it's not really resonating, so they sprinkle a little bit of warrants out there on top of it. And now, hey, I'm buying this Class A stock. I'm also getting some warrants on the back end. Yeah, I guess I'll participate in this round. So it's used as a direct capital raising tool for the company. In most cases, we're going to get to a specific case in a little bit, which is kind of interesting and what really was the genesis of this episode. So first off, it's a direct issue from the company to you effectively. There's no intermediary. They're not trading on this kind of listed venue like you're used to out there. And also, as Dan pointed out, when you hear all this, these warrants, when you exercise them, a traditional option, obviously you buy an option on Apple, it's on 100 shares, and it's on existing float that already exists out there. You're not diluting anything when you exercise your options on Apple and you get some stock. Now, that is not the case with a warrant. When you exercise a warrant, these are new shares that are being created. Hence, you are diluting the overall pool of equity, which is usually not desirable for common stockholders out there. So that's maybe another reason why warrants are less frequently used here in the US. That dilution can become an issue out there. So your quick summary of kind of the similarities and differences between listed options and warrants. They're very similar, but listed options obviously trade on an exchange. You can go down and sell puts on Apple on the SIBO if you want. You can't really trade a warrant with some exceptions. We'll get there in a second. You could trade an option on just about anything that's listed out there. The underlying for the warrant's going to be the shares of that particular company that issues it. So that's going to mitigate it. You could use options for really any purpose. You talked about that a million times. Warrants are specifically used by the company to generate some more action around a capital raising tool like a debt issuing or selling shares out there. These are, again, custom instruments, so they're not standardized expirations like you're used to seeing on an exchange. Because they're custom, the settlement could be all kinds of wonky, and it usually is. It's usually some date far off in the future that doesn't traditionally line up with traditional options expirations, but again, there could be some exceptions to that. I think we're going to get to one of those in a second as well. Usually we see a lot of zero-day options now. The focus is very much short-term. For warrants, they tend to run longer, usually at least a year, if not longer. And again, you have your regularly standard listed contracts for options versus what is effectively OTC for the warrants market. All right, that's your breakdown out there, the similarities and the differences out there. Now, Dan, as I run through all these, if you have any thoughts you want to add, and then B, you've traded a lot of different things over the years. Have you ever wound up with a warrant in your account, sir?
I have, but it was on some garbage stock, and the warrants were a garbage option to buy more garbage at a price that we'll never see.
Just the kind of thing you want to see when you open your trading account.
Yeah. So yeah, I mean, I've come across these warrants are interesting. I need to do a little more digging into it, but I don't know. We'll see what we come up with here on the show.
Mr. Rhoads, we'll get into our specific example in a second, but before we get there, really quickly, you are the professor in residence of finance over there at IU. You do teach warrants to the future minds over there at IU. Anything you want to add about warrants versus options, sir?
Probably the most fun that I have when I'm teaching these things is I will, a lot of them will have a window where you can exercise them. Like you'll be issued a warrant, and much like if you work at a big company and they give you stock options, but you can't exercise them for 3 years, warrants can be similar to that as well, which means you are kind of combining European style and American style. If I give you a warrant that expires in 3 years, and you can't exercise it for the first 2 years, there's kind of a hybrid valuation that you need to do around that in order to try to try and figure out exactly what you think it should be worth. So that's one of the fun anomalies. And it's like Dan was saying, it was like, got to dig into them. They are all very, very, very unique. You can teach call options and you can teach put options, the straightforward American style and European style. But then when you start to get into these exotic type of options, it becomes a bit more of an issue.
Gets kind of fun out there, listeners. We're not just playing with the standard stuff anymore, which gets us to the question that inspired this episode. This comes from Chris Lovell. He's been in and around the pro for a long time, and he wrote in very panicked to say, Mark and Dan, which I love it. Something weird happens in your trading account. Who do you turn to? You turn to Options Bootcamp. I love that out there. That's why the show has been running for so long. We are happy to provide that service. Unfortunately, he sent it in on a week when this show, we had already recorded it because I was traveling to other things. We had to wait a week to get his answer, but maybe not. Dr. Vix was to the rescue there, but he wrote in and said, Mark and Dan, I received 10 GameStop warrants with the recent dividend that GameStop put out on October 3rd. Not really sure how, because I had a cash secured put assigned after market closed on 10/3, and he thinks he didn't make it in within the window, but nonetheless, he says, here they are in my account today. Kind of like Dan, you open up your account and one day you got some warrants sitting in there, and it's not maybe a welcome surprise. He says, now what the hell do I do with these things? I believe they have a strike price of $32, which he did write in later to amend. He said, sorry, the strike price is $26.50. I read somewhere it was going to be $32. I'm totally confused. So that's all right, Chris. Everyone's confused. He says, I believe they have a strike price of, let's say, $26.50. They do not appear to have an expiration. Looks like a delta of 1. So he's thinking they're pure underlying, effectively. I've never held nor traded a warrant before. How hard is it to trade out of these things? And why do you think GameStop made this move? Million thanks, Chris. Well, Chris, as it just so happened, your question came in right as I was doing another show, the European Market Brief, which you should be checking out, listeners, with our good buddy, Mr. Dr. Vix. And I initially put it in the docket for that one because I didn't have a chance to look at it, and I thought it was for that show because we get a lot of warrant action over there across the pond. But as I looked at it, I said, oh, no, this is for our Options Bootcamp. And Russell, as it just so happened, said, you know what? I teach warrants, and I have seen this GameStop warrant issuance. Allow me to respond. So that's the kind of service you get here on the network, listeners. You get a personal response from Dr. Vix in your email inbox. We can't guarantee that for every question. We get a lot of them. But once in a while, one does resonate. So, Mr. Dr. Vix, you were very eager to come in to discuss this because, dare I say it, maybe if GameStop is doing it, then maybe it will be the cool thing with the kids, and perhaps we are undergoing a warrant assent. So, Mr. Rhoads, I'm guessing Chris is not the only person in our audience who woke up to find some GameStop warrants in their accounts. What do you have to say for him, the strike price, and you've been doing a little bit of a digging into the active market for these warrants. So what do you have to say for Chris and our listeners?
Well, first off, they actually do have a strike price of 32. And these were part of a spinoff that GameStop did. They did a 3%, 300%. No. They did a small spinoff of one of their divisions, and for every 10 shares that you had, you got a warrant. And the warrant on that gave you the right to buy a share, basically a share, at 32, starting September 10th of next year through October 30th of next year. So you've got, there's a 6-week window in there, and they were issued on September 10th of 2025. So they were issued last month. There are a lot of these things out. There's 7.1 billion of them outstanding. And they, as I said, they expire in October of next year, but you can't exercise it until September 10th of next year. However, these are one of typically, I did do some research on where you usually find these things trading. Typically, there might be between 5 and 10 warrants trading next to the shares on the New York Stock Exchange, and that's what's going on here. The warrants right now, they're 276 by 277. Very tight market, tighter than a lot of the options we would talk about, especially when we're talking about some of the money markets we talk about on the ball show that I'm with.
Penny wide or 1 year out warrants? So what are we doing?
Well, you're getting, they've got a 1 penny spread, 23,800 by 1,300. That's a liquid market, man. And they have traded just over 865,000 warrants today.
Wow, so Dan, you and I are trading the wrong stuff. Penny wide warrants is where the action is, Dan. What do you think?
The problem is, each of these warrants, the actual notional value, it's not like you're multiplying them by, it's not like you're taking that $2 price and multiplying it by 100.
They're they're 1 for 1, correct?
Yeah. And I believe, so if you had 100 shares of GameStop, I believe you would have gotten one warrant. You'd have gotten 10 warrants, basically, with the right to buy 10 shares a year out into the future. And this is how they were compensating people for some sort of a spinoff. This was a funny kind of spinoff, and this is one of those things that I would send students off and have them write a paper around, because there's so many funny moving parts to it. So that's the deal. So for every 10 shares that you owned, you got the right to buy 1 share starting in September of next year. So if you had 100 shares, you've got 10 of these things, and you could sell them, kind of like an odd lot at $2.77 each right now, or $2.76. The market just moved.
We're talking about we killed it by a penny.
We killed it by just talking about it. We started squishing it. It was kind of, and I said it's kind of fun. What I did do is I went and looked at the 32 strike calls that expire in October of next year, and they are trading 266 by 268. So the midpoint for them is 277, which is exactly where those October warrants are trading as well. If you own some of those warrants, maybe if you've got 100 of those warrants, maybe you can arb them or do something with the option market if you want to lock something in. Or in my advice would be get them off your books and go sell them. If you've got less than 100 of them, just go sell them at the New York Stock Exchange and move on. These things, they're basically $9.75 out of the money. Stock's at 22.27, so 9.73 out of the money. If it's like Dan Passarelli was saying there at the very beginning, he's had some of these, they had junk prices, etc. I hate to make it sound like I'm giving a direct recommendation here, but what is your upside if you've got 10 or 20 of these, dollar wise? How much do you really think GameStop's going to go up? If it get meme stopped one day, if that's what you think is going to happen between now and September, sit on them, but be ready to get out of them, much like you'd get out of VIX trade quickly.
Well, that is awesome that they do have such a vibrant and liquid market. One of the reasons, again, we don't talk about warrants is they don't really trade a lot here. So the fact that you and clearly a lot of other people there, Chris, are sitting on some warrants penny wide about a year out, that's a great market. You can't really get mad at that. So it sounds like you do have options. You're not stuck sitting on these things. You can actually get out of them. And I think that's probably sage advice. If you're not sure about these things, you don't really want to have them cluttering up your books. There is an active bid out there. It sounds very similar to the actual listed options bid. So you could just hit that bid, get the heck out of Dodge. If you have a 10 lot, remember, these are effectively 1-to-1. So one warrant, one share. You're not seeing the 1-to-100 you see with a traditional option you might be used to. But hey, if they're, $2.77 out there, you got a 10 lot, pocket a little bit of cash, take them off your books. If you really want to keep playing, you can go back out and buy the listed contract. It sounds like expires around the same time, and it's not really that dissimilar from a price perspective. And that at least is something maybe you can sink your teeth into a little bit easier. Or again, maybe get the heck out of Dodge. You're not often handed warrants that have an active and vibrant market around it. Also, maybe these things will stay this active, but I have to imagine there's a lot of people out there right now who are in the same boat as you, trying to figure out what to do. Maybe once that kind of cools off, maybe this market will cool off a little bit as well. I haven't gone and pulled up the liquidity for 1 year out GameStop, but I have to imagine 1 year out isn't the hottest option on the books for GameStop. So might be another incentive if you're kind of on the fence. Hit the bid on these things. It's pretty tight. You can always come back later on and pick something else out. Dan, is that your thought as well? You got a 1 penny wide market on these things going out a year. They are surprisingly active. Would you take advantage of that, or would you be riding these bad boys?
Well, I think the question, because they're so shockingly efficient, meaning that the price of them it tracks very, very closely to the listed options. I would just think of it as an option, but, of course, one warrant is one share, not 100 shares. So, I think if you want to be long the calls, you stay long the warrants. But if you don't want to be long the calls, then sell them, get rid of them. And if you, just look at it that way. I was very, very much expecting there to be some sort of arbitrage opportunity. And it's like, wow. I personally can't find the prices, but from what Russell just quoted here, if you want to be long the calls, keep them. If you don't, get rid of them. And that's unrelated to the stock. But that's the way to think about it. And, if you like GameStop, but you want to do like a covered call, you got no business doing the warrants because you're long the calls instead of being short the calls. Yeah.
Yeah, you kind of got handed a gift here, Chris, in the fact that not so much the warrant, but you got handed a liquid warrant. Usually, it's like Dan said, you get a warrant for some ridiculous name you even had in your portfolio, and it's for some ridiculous strike that is very far out of the money, and there's no liquid market. There's no bid you can hit. you're stuck just riding them to oblivion. Here's a case where you do have an exit ramp if you are so inclined out here. So again, probably a little bit intimidating. And for all of you out there who maybe got this same notice as Chris, luckily for you, there is an active market out there, so you can divest of these things if you are so inclined. So there you go, listeners. A little bit of an overview of warrants. I didn't think we'd be getting there, but you know what? If GameStop is going this route, perhaps we'll be talking about warrants again. Perhaps this is the start of a warrant assance here in the U.S. Mr. Rhoads, do you have any final thoughts on warrants for the folks? And also, do you think this is the beginning of a warrant assance where GameStop goes, others will follow, sir?
It could be just because interest rates are still relatively high, and if firms are looking to raise money, et cetera, they've got to offer kickers. I wouldn't be the least bit surprised if we see some other entities try to do something like that. I did just one other interesting thing. You mentioned the liquidity thing. If you look at the open interest for the October of 2026 GameStop options, the second highest is the 20 calls at about 2,000. The highest is the 32 calls, same strike as those warrants, at a little over 8,000 contracts. So somebody probably has done something where they're locking that in.
A little bit of ARB action between the two would not surprise me at all. Mr. Dan, same thoughts for you, sir. Any final words, final takeaways on warrants for the folks, sir?
Well, I mean, I'm just throwing this out there, very, very, very broad strokes, but traders are good at pattern recognition. And if we go back and we look at just the history of GameStop, right? Like the original OG meme stock, where there was kind of some collectivist buying, which the government apparently didn't have a problem with that. But I just wonder that if there could be some sort of collusive activity among people to bid this sucker up, bid the stock up. I don't know. It becomes more of a spectator sport than if this was a different stock. Yeah. So I don't know. And would I think GameStop would they have thought that through, and would that have been in their decision? Let's think that through out loud here. So GameStop will effectively have to sell these shares at the strike price. And so if the stock popped to 50, 100, whatever, would they be happy selling the shares at 32? Probably, because it would just be an anomaly and come right back down, because they're effectively the counterparty. They're the ones if you think about it in terms of like a listed option, if I'm buying a call in the listed market, someone else is selling the call. So here, if I'm owning these warrants, the counterparty, the way I think about it, is effectively the company. So they're basically getting assigned, if you want to use similar terms. So I wonder if this just gives them the opportunity to sell shares at $32 a share. I don't know. I'm just thinking out loud, just thinking it through.
I think they're hoping they don't get exercised.
Yeah.
I think it's a way that they were able to get rid of a business, issue some paper to their shareholders that may have some value or may not. But I feel like I'm certain, because GameStop's okay if they sell some more shares, et cetera. But their current shareholders are not going to be particularly thrilled if the stock has worked its way up to 40 or 50, and they've got to sell a bunch of shares next fall at 32, because that's going to dilute their ownership a bit. But a stock like GameStop, who freaking knows? But we're looking at almost about a 40% move. Now, it's done it in a day, and I know that, and that may be in people's minds what makes these things attractive. But I'm I think this will be junk paper like the other things you mentioned. I love when you said that. I thought that was a great way to describe it.
Yeah, it's interesting.
An $55 bill. Do you really want to pick it up off the ground? Yeah, I guess so.
Right.
Are you accusing GameStop of skullduggery? I find that hard to believe, Dan, that such shenanigans would go on with a meme-related stock. How dare you, sir? But yeah, I'm with Russell. I don't think they really want to dilute their stock if they don't have to. But we have seen stranger things afoot out there in GameStop. So hopefully, listeners, that tackled all of your burning questions about warrants. At the end of the day, mostly poor man's options, mostly don't really trade here in the U.S., but if GameStop's doing it, they did kick off this whole meme craze. Maybe they'll kick off the warrant-assance here in the U.S., and maybe more of you will be writing in saying, I got warrants on XYZ stock. What the hell do I do with them? They're probably not going to be a penny wide, 600,000 up or whatever, like these GameStop warrants. So just something to bear in mind. This is a bit of a special case, but intriguing stuff. And hey, it gave us a reason after 13 plus years to talk about warrants. So that always is a good thing. And Mr. Dr. Vix, glad you were able to join us. Better late than never, racing all the way home just to make it in time to talk about warrants. We appreciate it. Our listeners appreciate it, sir. And if folks want more Dr. Vix goodness in their life, where should they go? What should they do?
Outside of the coffee shop in Clarendon Hills where I camp when I'm not on podcasts. My Twitter, my full name at Russell Rhoads. Not, as you like to say, not the weatherman down in Florida that has gotten in some trouble. That's not me. I'm a clean living guy.
Look him up on Twitter, 2 S's, 2 L's, RHOADS. If you get to a somewhat inebriated weatherman in Tampa, you have gone too far. Dial it one back, and you will get to the aforementioned Dr. Vix. And if you like his appearances, yet another reason to be subscribed to the full network. He joins us every week, usually on Volatility Views, and pops up across the pond every now and then on the European Market Brief as well. And Mr. Dan, I broke my contract with Russell. I got him to agree to appear on the one guy he said he never would appear with, a.k.a. you. That said, sir, if folks want more Mr. P in their lives, where should they go? What should they do?
Sure. Make your way on over to markettaker.com, 2 T's in a row, and join, get some free classes, get on our email list so you can attend some of our free online trainings. Love to chat with you.
There you go. Hit him up about the upcoming warrant-assance. Dan has a whole customized training course all about what to do with your warrants. Check it out over there. Previously, for the last decade, it's been surprisingly unsubscribed, Dan, but maybe you got some takers now. You can bring that course out of retirement. MarketTaker.com is the place to go. Don't forget the second T for Theta. And don't forget to hang out in the Pro, because we'll be back in a little bit talking all things futures with our good buddy, Mr. Kevin Green from the Schwab Network, talking a lot of things going on in the world of futures, including, you may have noticed, a little bit of action out there in Precious. That'll probably come across our radar. What else will make the show? You got to tune in to find out. And, of course, we wrap up the day with our latest edition, the Hot Options Report. Back again tomorrow, Flowmaster in hand to talk all things option block. Then, this week in futures options, Friday Vol Views, where we'll be joined again by Dr. Vix and a special guest. Well, you got to tune in to find out. Well, we'll be joined once again by our good buddy, Mr. Kenny Loggins. Well, you got to tune in to find out if we're heading into the danger zone. Then we're back again next week, all the way through to next Education Wednesday, another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.